In this presentation, we will continue on with our comprehensive proprietorship problem. We are now going to be on January 5th, where we purchase supplies on account. For more accounting information and accounting courses, visit our website at accountinginstruction.info. So we're going to purchase some supplies on account. We're going to be here in January 5th on cell B12. Note that if you're working with the same worksheet instead of uploading a new worksheet each time, you may have to go to the View tab, Windows, and unfreeze the panes in order to see column A if you so choose to. Okay, so what we're going to do now is go to supplies. I'm going to go through our same questions looking at the trial balance. First, is cash affected? And we're going to say here it actually is not affected. How do we know that? We bought supplies, but it says on account. Now, in real life, we would know what that means. We would have used a credit card or used some other form to buy it on account. A book problem is going to need some form to say that. It might say we bought it on credit. It might say on account. Sometimes it tries to not say credit because it gets mixed up with what the term credit means in terms of just debits and credits. But in any case, whatever term it used, that means that we bought something and we haven't paid for it. And that means, of course, we owe something in the future. So we're going to owe a liability. Now, we probably know what that liability is, but before thinking about it, because it's more difficult to think about should we debit and credit the liability, we might want to think about, I would suggest thinking about what we got first, because that's probably going to be easier for us to know whether we should debit or credit it. In other words, we bought supplies. And if we look at our trial balance, here's supplies. So supplies is an asset account, kind of like cash. They all have debit balances. We got more of it. So it's kind of easier for us to know that it's going up in the debit direction. So I'm going to increase supplies. We're going to copy it. So I'm going to go to L7, right click and copy. We'll put that on the top in cell C12, right click and paste 1, 2, 3. Now you might have asked, why are we debiting supplies? If you scroll down here, you'll note that there's a supplies expense account. Why aren't we putting it into the supplies expense account? And sometimes some businesses will, and it really depends on in theory, it depends on whether we are using it or not. In other words, if we're buying large stacks of supplies, kind of like if we were to buy inventory, or in a similar way when we bought the equipment, we haven't yet consumed it. So what we should do is put it on the books as an asset, and then as we consume it, we should expense it, and by doing so, we will then allocate the expense to the time period it was consumed or used in order to help generate revenue. Now, if supplies are small, like if we're buying like paper clips, even if we bought like 5 years worth of paper clips, probably wouldn't be that significant in dollar amount, and the easier thing to do would be then just to expense it. So in other words, in practice, there's basically often going to be a dollar limit where we would say it's immaterial, and therefore if it's immaterial, we will expense it immaterial to decision making. It's not going to affect our decision. So we will do the easier thing in that case, most likely, which is just expense it. But if we're buying a lot of equipment, like if we're buying medical supplies or a lot of paper, a lot of ink, and we're buying a lot at one time, then we want to put it on supplies and track it in inventory. Book problems also use supplies as kind of an introduction to inventory, because we're going to have to track supplies in a similar way. We're going to have to say, this is what we bought. We're going to have to count what happened to it and then determine how much was used. We'll do that in the adjusting process. So that's going to be this is kind of like our introduction to inventory. In other words, we're gonna increase the supplies. This is what we'll tell our accounting department. Whenever you buy supplies, just put it into the asset account, not the expense account. We will then, in our adjusting process, determine how much was consumed of what we purchased and reduce the asset and record the related expense at that point in time. Okay, so we bought the supplies for the 16,000. So that's a lot of supplies. So we should probably be putting it on the books as an asset rather than expensing it at this time. Then we're going to credit something for that same amount. Again, I could put a negative 16,000, but I'm going to use a little formula, which is negative of that number. So that'll just take that number and flip the sign. And you could just type in a negative 16,000 and enter, same thing, but I'm going to use a formula whenever possible. Now, what's that credit going to go to? We didn't pay cash. The good thing's not going down. Cash isn't being decreased by that credit. What's happening is a bad thing's going up. A liability is going up. An account representing we owe money in the future is going up. And that's going to be this liability account. So accounts payable. And note that, again, you may have known that we were going to have accounts payable instead of cash affected, but not have been as clear as to whether we should debit or credit it. We want to get a good idea of how to increase or decrease the liability, but it might be easier to think of supplies first if you're not used to it. Liabilities have a credit balance. We need to make it go up because we owe more of the bad thing, therefore we do the same thing to it, another credit. So I'm going to right click on it and copy. We're going to put that on the bottom in C13, right click and paste 1, 2, 3, those values only. I'm going to indent this, which is probably done for you already, but this is how it's done. It's in the Home tab, Alignment Group, Increase Indentation, and there we have it. So here's our journal entry that we have journalized, we have made, in other words, in the general journal, which is just this blue area. Now we're going to go ahead and post it and move it over to the general ledger on this side. So we're going to go through the process of posting. You could do that by making things really small, which is not what I'm going to do, but I'll show you how. You can just make this from 130 down to whatever size your eyes can bear, and then you can see where you're posting at the same time as this information over here. I'm going to make it large, and I'm going to use a little bit maneuvering. So we're going to go back up to 130, and we're going to freeze the panes to do this. So I'm going to go down here. I want to get rid of column A. I'm going to go to the right just a bit, scroll all the way up to the top. So I'm at cell K1, and then we'll freeze the panes, go into the View tab up top, go into the Windows group, go into the frozen panes and freezing panes. And again, if you want to scroll through it, if you want to make it small, any of those ways are fine. But I do recommend finding some way to use formulas. In order to do that, you got to find some way to maneuver in this worksheet. And I would rather show you how to maneuver in the worksheet than just kind of zoom in and out of different areas. So anyways, here we go. Here's the supplies. We want to record it here. There it is on the trial balance. It's the third account down, and therefore will also be the third account on the GL. So we've got cash, accounts receivable, and then supplies. Oop, a little too far. So here's supplies. So we want to be on the debit side. We're recording the last journal entry always. And so we are in cell S16. Within S16, we'll say equals. Point to that 16,000, bringing the zero balance up by 16,000 to 16,000. That 16,000 then can be used, or is used, thanks to the nice formatting of the worksheet, on the trial balance. If we click just to the left of the frozen panes and use our arrow key to go right, it'll pop back over. There's our 16,000. So supplies goes up, it's an asset. We're out of balance by 16,000 here until we record the other side to accounts payable. So here's accounts payable. We're going to record the other side. Let's get rid of that blue line. Here it is going to be our first liability account on the trial balance, and therefore the first liability account as well on the GL. So here's all of our assets, and there's that orange one. You can see it on the bottom there. That's our first liability account. So we're down here. Accounts payable, we want to be on the credit side. So here's the credit. We want to post on the credit of accounts payable in cell X21, where we will say equals, point to that 16,000, bringing the zero balance up by 16,000 to 16,000. That 16,000 then is used to create the trial balance, which we can see if we click just to the left of the frozen panes and use our arrow keys on the keyboard to go right. There's the 16,000. So we're back in balance here, hopefully. Let's see. It's a green zero, back in balance, so we look good. So what happened here? Supplies went up, asset went up, and a liability went up. So instead of supplies going up because we paid cash, meaning one asset goes up, one asset goes down in a similar fashion as when we bought the equipment, this time one asset went up and we owe it. We didn't pay it. We owe something in the future. Liabilities go up. So what does that mean to our total equation? That means of these assets, 116,000, a vendor now has claim to it, has claim of 16,000. The rest of it, which is the 116,000 minus the 16,000 or 100,000, is what the owner has claim to. So in theory, if we liquidated this company, in theory we can sell the equipment for 60,000. I know that's a book value right now. It's probably not actual. We probably sell it for less, but in theory, we could sell that for 60,000. We can sell our supplies for 16,000. Again, probably not in this case. It's probably less than that. But in theory, it's on the books for 16 until we adjust it. And that would give us total cash of $116,000, which if we were to close right now, we'd have to pay 16 of it to the accounts payable, and the rest of it would be ours if we were to close the business. So that's just one way to think about this as we go. No effect on the net income yet. We haven't done anything to the net income. We haven't expensed the supplies yet. We haven't consumed them yet. We will consume them this month and determine how much of that expense should be in the adjusting entries process by counting the supplies and determining what has been consumed in order to generate revenue. For more accounting information and accounting courses, visit our website at accountinginstruction.info.